investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. A very red morning we have. In fact, it wouldn't that be a coincidence to be talking about red when we're talking about the geopolitical situation? Let's just go straight to the charts. This is the Tiger Financial News Network's 10 o'clock to 11 o'clock show, the Tiger Technician's Hour, and therefore we're looking at this technically. There's a lot of things I want to do. Let's just run the numbers immediately. The H pattern that should have gone to an M pattern is a little mini M right there, but it's more like a large arch. It's gone. The Dow's gone under the 200 period moving average in the daily yet again. This is exactly what you didn't want to see. It's not a good sign. It's not a good situation, at least in the short term. I'm going to be talking about the weekly and monthly charts as we move along, but I just want to get this out the way. So there needs to be later in the day, I don't know if we can see it because there are a lot of things going on. And once you get this, my expression always is the market. People say the market hates uncertainty. I say, what? Every single day it has uncertainty. The market hates uncertainty about uncertainty. You just go once removed, and that's where we are. Market hates that. Okay, so that's what we're looking at now. The Dow's down just over 1%, down 414 at 34,520. But look at this. The S&P is down 1.2. Down 1.2%, down 54 at 44.20, slightly, slightly different pattern, a little bit of a weaker pattern, which is now right on the 200 period moving average. So technically, because it's holding the 200 period moving average just as we speak, could change within minutes. That is just slightly a technical intraday better movement than we've seen in the Dow, even though percentage is greater. Look at the QQQ. NDX 100 down 1.26%, down 450 at 351.55. Hasn't even been able to get close to the 200 period moving average of 362. Couldn't even get above the 14 period moving average of 356, I think it is, 0.30. Nope, it's at 351 right now. Not a good sign, and that weekly chart is deteriorating, and the monthly chart, I'll talk about that when we get back. Not a good sign at this moment. IWM, the Russell 2000, is trading, sitting on the 14-period moving average. It's actually on a technical, just chart-wise, it looks a little bit better in the daily chart. The weekly chart looks terrible, and the monthly chart looks terrible. All right, here we're going to go to the gold. Gold is up 25 points at 1897. Huge move. You see these lines here? This is when we go sharply down in the rectangle formation and then break above it, and then I do an extension to the upside. I usually just keep that in the back of my mind and I don't talk about it very much. What I do talk about is I take a trough on the way up that is important to do a measured move, and that measured move now is above the 1896 level, that this pink extension line, which should be a 1-to-1, but is this particular moment it's not. It's like a 1.2618. What we're looking at is we've gone above that. The Dow high today, the gold high today is 1900.00. To get a 00, a round number like that is amazing, but it's in a leg C. So I suspect that we get a bit of a pullback and then we go higher. And I'll talk about gold in a moment. I'm talking about the phases of the rotation that I sent out to my subscribers this morning. Quite an important for me an observation that I think is going to be. I don't know if it's prescient, but we're going to be looking at it in a different way. Silver, you remember I said it's got to get above the 200 period moving average, which is at 23.91. It's trading at 23.79, up 18 cents. It should be stronger, and that's the reason. You remember, for me, always gold is an instrument. It's a measurement of fear. It's like the VIX index for the equity market. gold is really the VIX index for the geopolitical economic stuff that goes on. All right. So let's go back to our charts. We want to look at the DXY. DXY is the dollar. Actually, look at this, because this U.S. is still the top economy. It seems like it's one of the top economies around the world. The dollar's holding at 95.80. It's just down 2 pennies. It should be down, way down. The day's young. Anything can happen, all right? But it's holding pretty darn nicely. I don't want to do euro and everything now. I want to get to some other things. Palladium. Look at this palladium move. Huge move up. It's breaking at ABC. This has now become a leg D to the upside in the daily, a leg C in the weekly chart for palladium, up 17 at 1180. Yes, these are Ds, and Ds are where D you can start to expect. A yellow light goes on just to say, just momentary caution, because this is when you can get a bigger decline. But at the moment, is holding extremely well. Let's go to high-grade copper. High-grade copper holding very well at 4.51, just down 0.019 or 0.02. Holding quite well, but off the peak D high. We're looking at, I want you to include here the DBA, which is the commodity index, because I'm going to be talking about that in a moment. DB Agricultural Fund trading up 3 cents at 21.09, just a little bit below the 21.37 high of the February the 10th. Hey, look at this, crude oil. February the 10th, was that, when was that? February let me just get that as a date. 14th was the high of 93.99. We're trading whopping down, moved down to 89.93, still holding the 14 period. Look, we've had 3 days of consolidation, nothing. All it does, like the last 3 days of consolidation, 4 days actually, held the 9-period moving average. This has gone a little low to the 14-period moving average. I have to tell you, we've got to watch these things really closely. We want to look at the TLT. Bonds, huge move up for the bonds, up 1.02%, up $1.39 at 137.16. Oh my, it's where it was 4 days ago. This is really something important to see. So I just wanted to I had a bunch of questions, and what I thought I'd like to do today is this. I was going to do it yesterday, I was going to do it the day before, in fact, and I kind of got carried away with other things. Let's do this right now. This is something I worked on with the late Herb Brun. It was kind of I worked with him for years and years and years here in Boston. He had worked for Raytheon. He worked for built one of the first computers. An amazing guy. You'd never think so, but because he was just a very modest guy. But I used to take him out for a meal at some restaurant. He had some favorites, and we'd just sit there and we'd walk, and I'd tell him the things that I would like to do with TradeStation. He was an expert at TradeStation, and he developed this for me, and unfortunately he died 3 years ago with a whole bunch of things that I really wanted to get to. I never did. So what he did for me, I gave him the parameters that I wanted, and he set for me the Chapman wave support and resistance levels. So look here, the TLT on the daily chart, look at the red. 135.35 to 134.68 are the last 2 key support levels. What was the low yesterday? 134.51. Right on the button, and now we're starting to rally. I'm going to go through all of these things. Even let's go to gold. As I'm going to the break, look at gold. 1899 is the automated resistance. Today we hit 1900 round number exact. I'll be back in a minute.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
I can't remember where we left. I just want to show the GDX doesn't have anything above, because 3462 was back in November as the GDX Chapman wave automated resistance level. We're above the 200 period moving average every time. Let me squeeze this so we can put perspective on it. Look, every time since it broke down back in, I think it was June of last year. What date was that? That was on June the 17th of 2021, when it plunged down and then continued lower. Look how important the 200 period exponential moving average has been. It cannot hold above it. So we've had a one November move where we had 1, 2, 3, 4, 5, 6, 7, 8, 9, just a little bounce to the 3470s, and then it came right back and it couldn't do it. Then back in December, it went for one day. 33.15 was the automated resistance. It hit 33.19 and it plunged. Now we've got green candles above it, and we'll see whether or not this can become a support. All the time, remember I mentioned that silver had the same pattern. It just couldn't hold above the 200 period moving average. It hasn't even been able to get above 23.91 yet. Today's high is 23.87. So we'll see, because above it, it's got 24.34 and 24.63 as resistance, and the last major high was in January the 20th at 24.75. So that's the reason why I'm saying gold for me is it is a benchmark, number one. It is an icon of what I call the fear factor. And number three, it is in an area that I'm going to show in a moment, unlike many of the other sectors that we followed for a long time, this is lagging and going to major highs. And I'm going to get, in fact, let me get to that right now. So what I want you to do is, I want you to show monthly charts. So let me expand this. So in the monthly chart, we've had from the bottom on the left, yeah, right there at that bottom, that's January the 20th. That's one thing for silver. Silver goes to about $12 and runs up and double tops at about 30. That's a fantastic move. Then it pulls back and it's stuck. Now look at this. we had the dollar, DXY, and remember, we got the dollar in April of 2018, of 2018. The low was 88.25. We went long. That was 18. Yeah. We went long at 90, and through the UUP, and we watched it go all the way to 102.99. Remember, I've been talking about these double top patterns that are absolutely potent. And the question came in: would I go long the dollar? No. I look at the dollar. If you are looking at currencies as a safe haven, maybe I'd hold it. We're going to keep holding it, but that's something separate altogether. I would rather say you've got to be following the gold action right now. It's just way more important because that's going to have leverage. Dow's down 479 right now. So you see, dollar had a big move from 78 back in May of 2012 all the way to the high of 103.82 peak did on January the 20th, 2017. Pulls back to 88.25. That's a 20% big move. 12 points. It's a big move. And then it goes all the way back to 102.99. We're talking about years. We're talking about 2017 and 2020. 3 years in a currency, that's huge. And what does it do? It double tops within 83 cents of the previous high. That's why I've been talking about these patterns that you got to find in the market. I didn't wake up one day and say, hey, how about double tops? Hey, how about double bottoms? No, these things have to jump out at you and say, hey, here I am. Don't ignore me. I'm very important. Okay? So now what's happened, we've gone to the 88.25 low of February of 2018, all the way to that almost 103 level, and back to 89.21. 89.21, I would say, is less than $1 from the low, double bottom. And now we're rallying. So I want you to put this in perspective. So that was the currency, the dollar, as a bull, in a bull phase, kind of remains in the bull phase, but it's in the middle now. It's just kind of stuck. Okay, that's number one. Let's go to the TLT. Bonds go from back in 2014 at a low there around about 101.69. Let's go to 101, January of 2014. Runs up to 143. That's like a stock. That is huge. These are bonds. July of 2016 comes all the way back down to 111. Little double bottom there. And goes to 110.09. Then it tests 111.90. Whoops, that wasn't right. Let me just double check that. I don't want to give you 111.90. I'm sorry. Yep, that's right. And then it runs all the way to 179. It's called 180 for round numbers. 111 to 100. I would say that that's a pretty decent rally. And then it comes all the way back and makes the pattern that we call the dreaded H, the one that we're in right now in the Dow. And it hasn't taken out 133.19 right now, but everything about the MACD, the stochastic, the on-balance volume, and the week 9 period under the 14 says, wow, it better have a spectacular rally right now, because at this point it looks like it wants to test the 103.19 low. Now let's go on. Let's go to the DBA, which is the soft commodities. We've been long since 13.77. The low was 13.25 back in June of 2020. And here is it at 20.09. So you've had the soft commodities in just a mini bull market in terms of the chart. In terms of the actual prices, it's pretty much a bull market. But this is long term. It had a high up in the 27s. It went down to the 13s. Almost that's cut in half. And now it's up to 21. So we've gone through the dollar. The dollar's now consolidating. We went through bonds. Let me just do this again. Just so we're talking about apples to apples. Bonds had a big move. It's more than a consolidation because it's about to retest. If it takes out the 133.19 low on a closing basis in the monthly chart, it actually says that bonds could be in a serious downtrend. So this is really important, right? There's a little bit of a positive divergence with the stochastic rallying, although it's very weak, from the low that was made at 133.19 back in, I think, February of whatever that, what was that? That was March of 2021. Now we get back to the DBA for a moment. All right, and now we're going to go to crude oil. So crude oil had this magnificent rally once upon a time. Some of us remember it very well, going to that major high back in, don't move too much, 2008, July. That was with the market, you remember? It was just after the market's high. And this Phantom Peak B, and then it went all the way to a D using that Phantom Peak D and plunged. I mean, just a plunge from the 220, 210 level, 220, down to the 89, 90 level. And then it had a big rally, but really, in the context of it, it's only a side, it was a rectangle formation that lasted from 2009 to 2014, and then it dropped precipitously. But now look at this rally.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So thank you, Kevin, for that question. So Kevin writes in and says, "Hi, Basil. Do you recall what happened to the market after Russia invaded Georgia?" You know, I completely forgot about that. I was thinking of similarities of what happened, but it didn't even occur to me. It did that August the 1st to the 12th of 2008. When was the top in oil? That was, that was July of 2008. So it was right there on this bar. So there wasn't the same result unless there was this intention and there was fear going into it. I just don't remember exactly how long it took. And that's why oil went up. And then afterwards, it was all a done deal. And the oil went from, well, this is a continuous contract, so the price will change. But from the high of July 2008, I have it as 219.41. That'll change. Depends on software package. But that date and that is exactly right, and the pattern is. And the low was 92.30 on February 2009. So wouldn't that be great? That we're looking at something that's resigned and think, so this is kind of an ongoing thing. And this is also a test of, this is what happens very often with Russia. They test whatever president comes in, they give a good test. So this is the oil continuous contract, and we're now at 89.72, but we've broken above the 85.65 high of October of 2018. My point is this rotation. So what does the rotation mean? It means that at the same time, you also have no choice but to look at gold. So the continuous price of gold is here. Look at this incredible bowl or cup formation. I've been talking about this for a while. I just hope with this time, this is more a cup and handle. It's definitely not a Chapman wave cup and ladle breakout pattern, thank goodness, at this particular point, because if it did that, first of all, patterns that we talk about, there's this lowercase h that I thought would go to an M pattern in the Dow. There's still time, but it's getting a little late. And if that's successful, it turns into a beautiful cup or bowl formation. So we're looking at this. Look at this huge pattern. When this thing breaks out, I don't have it anymore. I don't know what's with TradeStation, why they don't keep the data as long as they should. Maybe they changed the symbol. They always do that. It just, everything gets messed up. But I had this going back to 2000, all notated and everything, just beautifully. I've got it in the file somewhere as a saved picture. But there was a beautiful cup formation in 1989 to 1990 to 1991. And it took off. And it took off when it broke out right there in 2005. And 2006 started a huge move up. And I don't know if this is now even a bigger one. And that's saying that at some point, not now, but in the future, we're looking at gold. I don't even want to talk about the price, but making a whopping big move to the upside, or whether this is going to stall. Because look, in the Fibonacci that I've got here, we've held some levels beautifully, 50% retracement right on the button. Then the 2.36 is what they've got. It's just right there right now. So I just wanted to say that I think in this rotation of sectors, that there's a really good chance, and I just for the moment want to include the NDX, and I'm going to go to the continuous contract. That look at this pattern, look at this incredible move. And the big question for me now, and I think for everyone, is going to be, is there going to be such a move into commodities because of inflation that only the stocks that are commodity related and favorably, they are in the favorable position of interest rates going up, start to move higher. But generally what you're looking at here is the deflation, real deflation of all those high tech and the tech area that was just almost the eyeballs of 2000. I have a different opinion about that. I don't want to take too much time now. I just wanted to say my impression at this particular point is that gold hasn't broken out. It is within its rectangle formation in the intermediate term, as it stands right now. That can change. But my thinking here is that because gold had a high back in 2020 in August, and then pulled back, but had a pretty decent, really just this is a very, from the consolidation level that I took it from, I consider that a 50% retracement. And this is where you get to see whether or not there's a cup formation, and I could draw this in, I'll do it in right now. Is there a cup formation with a target, a left side, right side price time match to the next level of resistance, and that would take you to 1900 was there. So that high was 19. Let's go to 1990. Let's call it 2000. 1990 to 2000. And will it take you there in a left side, right side price time match? Well, that won't work, but it'll be certainly price time match to there, right there. So that takes you to March, this coming month, with an acceleration. I just don't want to ignore that. I think that this is very important as we see that we've seen consolidations with sectors. We've seen that sector preference has been the name of the game since the low of 2009. That first big consolidation, that 2010 period, was just a rotational correction. That's where I said, wow, no retesting of anything, just continually making sideways moves as one sector that was going well takes a breather, and the other one that was not doing well takes the leverage to the upside. So I am saying right now that gold is acting so well that I think, mostly because of the fear factor, that if the GDX, and I need these to be in sync, so that if the GDX trading off its high right now with a little doji candle in leg D, I suspect that we're really close to, and I said to subscribers, we're going to start a particular position in a particular stock in the gold sector. Just be aware that I think that in leg D today, it's in leg C, but in the general gold and GDX, in this leg up, we could have some kind of a pullback, a breather. We might even get that crazy Friday where all of a sudden crude oil slides, gold slides, and it looks like, wow, this is great. And the options players just take that absolutely, they take all these, the shrinking premium in the calls. And although I was looking for call options this morning for subscribers that I thought, and they were still pretty darn expensive. So if they can shrink, let's try to get a rally today, and then we have a sudden slide at the end of the day, and an early morning dip, and then we might be ready for some kind of, at least to get back down 475 points, maybe 250 points to the upside tomorrow. We'll see. All right, now. So I've done that, and I wanted to say it's this rotational aspect that I have to respect because of the move in gold and because of the geopolitical situation. I thank Kevin, because I'm going to keep in mind that the oil sector topped a month before the August 1st, 2008 to August 12th, was it 12th, war in Georgia. That is between Russia and Georgia. I'll be back in a moment.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. I don't want to get run out of time. I have questions. I'm going to get to them. Just wanted to show you the 10-minute E-mini made a high of peak F in the Chapman wave at 4 o'clock yesterday, and then went sideways, had a little mini peak A, B, C, D. D's where we always get a little cautious, and then plunged from the 44, say 70 area or 68 down to 44, 37-ish. Then it went peak A, peak B, C, D, E, F. And then, boom, it plunged again. And look how important the 200-period moving average is. It hugged that up and down, wiggling up and down with that the midpoint right there, like a pivot point or the propeller shaft, fulcrum. And then it goes under and it goes another peak, A, B, C, D, E, and then plunges. And that's the plunge we're in right now. Now we've made a trough D. It looks like a trough D in the 10-minute chart if that low is not taken out. It's from this moment on that we've got to watch to see, and I'll just go through this. I'm not saying it's going to happen. I'm saying I'm watching this really closely because of the arch formation in the daily Dow and the S&P. And right here, the chart, I usually use the left side is the daily, middle is the weekly, and the right side is the monthly. I've got CF Industries, and I want you to bring this up in a moment, but I'll do it now. I'll do that just to show you. Look. This is the CF Industries holdings, hydrogen, nitrogen products, clean energy, fertilizer, emissions, abatement, comes out with earnings at the other end, it plunges, and it goes down under 68, having made a nice recovery high in the 77 area just 5 sessions ago. And where is it now? This is what's happening in the market, that good stocks go down briefly and then come right back. And it's at 78.45. The weekly chart is in leg D. Maybe it's going to make a peak D, but in this case, in leg D, holding all the technicals beautifully. Stochastics at 88% in the weekly. Monthly chart is great. It looks terrific. So it's one of those cases where it's hard to tell when it breaks so sharply and it goes from 77s down to 68. What was that? 60? No, I'm sorry. It wasn't 68. It was 66.95. I mean, a 10-point move just like that in 2 days, that could scare the daylights out of anyone. However, look at this return. It actually closed with a green candle, and yesterday was a beautiful green candle, and today's under these conditions. And that's what I was saying to subscribers. It is so important to keep your eyes on what's working in the more intermediate term, because that's what keeps you in the trades. So I like this. The question was, where could I get back in? I was stopped out. I took the last remaining bit that I had. I got stopped out. Where could I get back in? Look, it's so risky in this market, but you've made money. I'm going to say you can do 2 things. One is, at some point, if the market keeps dragging down like this, it will drag this lower. But it's acting so well. What I would do is I'd put at 75.33, I would put the last bit that you had that was stopped out, I would put part of that back in. get your foot back in the door. I'm not sure this is going to really break in a massive move into the 80s. It could, but at this particular point, it's kind of in a sweet spot. But market conditions are really important to monitor. So I'm going to say, I would sometimes when you get taken out, you don't want to go right back in. But when it moves in a V-shaped pattern like this, it's telling you that there's still internal strength. So I'm going to say CF, trading at 75.31, up 89 cents. Put a little bit back in. If you're not prepared to lose anything after this, and you just say, look, I'm prepared to wait, waiting's fine, there's no problem. I am saying that it is holding well enough for me to say the comeback that it's made from that 66s to almost 10 points higher within 3 days. I'm just going to say I like that action. I don't want to be out of it if it suddenly breaks out, because if it breaks to the upside, you can start adding. So why not just, you asked my advice. My advice is either you have to have patience to wait for 73, and then if it breaks 72, you say, oh, there's that dreaded H pattern. At this point, it's holding, and you want to be there. For some reason, it actually breaks to a higher high than today's 75.82 and gets to 75.90s or 76s. That's just all. Okay, and you're not risking. You're risking a little bit of profit that you made in a very different way. It's almost fresh. It's a brand new start signal on something that's acted really well. By the end of the day, it could be down at 73. But at this point, it's telling you that fund managers are looking at this favorably. That's my impression. Okay, now let's do a couple of things. I wanted to say, look, GE is down today. It's quite down sharply, 252. You have to wonder why it even went up above the 200-period moving average. But it's come from 88 to 101. This is, something's going on, and this is the environment we're in right now. You've got to respect that what is working, you don't want to fight. So there are a bunch of stocks. I'm not saying to buy GE right now. It's a different kettle of fish altogether than CF. But I am saying look at the market and look what's happening in some of the areas. Look at Shopify. Look at Shopify. Where did I type that? Did I not type it on the chart? Did I type it somewhere in space? Yep, I did. Okay, there it is. Shopify, 1762.92 back in November. And now it's trading at 702 after the dreaded H didn't even have an M formation. Well, it did a little mini, but basically it's the dreaded H failure pattern. And you've got maybe I'll make it 3 days to get back to the most recent low, around about 800, and it's at 702 right now. This is serious stuff. I mean, anyone who was getting along, Shopify, SHOP is the symbol, is down 44 right now at 701. Ever since, going back all the way to June of 2020, is looking at a position that's not favorable. Okay, and that's just what you have to think of. In the den, just mentioned Xerox. So Xerox isn't the old Xerox. In fact, I believe they're in transportation. I have a friend that I play tennis with. And I know that at one point he was consulting for Xerox. I thought, Xerox, I said, oh, they're still around. Huh? He said, no, they've changed. They're more in transportation. In fact, he was in an advisory capacity. ABC, nice move up. And that's what I mean, that there are stocks that are going counter to the general market. I don't think this is going to last that long on the upside. Just for the moment, it looks like it's a very nice, some news-related bounce. So here we go. Look. I was talking about the semiconductors. I think there's a real issue, and that real issue is being shown today, down 9 at 270. You had Applied Materials comes out very, very good earnings, blah, 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 is down 3 at 137. I think there's a real issue here, and that issue can't be dismissed because where the semis go, mostly the general market tends to go. So I'm respecting what's going on. Look at NVIDIA, which I've been talking about as acting horribly since its all-time high back in the 340, what was it I said, 340? I have to type that in. 346 area back in 22nd of November with a 319 round number low. And here it is at, 346. I would definitely say that at 244, that is a serious decline. And this was a company that was just touted all the time. Now that monthly chart is, I'm still calling that a peak F. That's serious stuff. So I don't want to dismiss it. So the question really is, at this particular point, is the mega bull market still intact? And my answer has to be, on a purely technical basis, I have to say yes. Am I running out of time? Did I not finish what I really wanted?
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Suppose we're back, and one of the reasons why I said to subscribe for a long time now, let's just keep raising cash. Let's just have cash around. I might have to get out of our very long-term positions to raise cash. I want as much cash as possible, because don't forget, when the final slump to the downside comes, the last 3 days can see 15 to 13 to 20% declines, and then you get your V-shaped turnaround, and 3 days later you're looking and say, oh my God, yesterday we were at X, we went down, and now we're above X. So I'm just saying, have cash ready, number one. Number two is we want to put it in selectively. We're trying to do under-the-radar things. If they don't work, that's fine, but we try for very small positions and low-price positions. I'm not cheap, but lower priced, because I want to put as little money to work as possible on the long side, just at this moment, in the equity portfolio. But let's just do this. The VIX index, on a day like this, is up 10% at 26.89. Now, it's held the 9-period moving average. I'm just going to say that if by this afternoon, because of options expiration, they must have just killed all the call premiums. They must be so shrunken, and the put must have been expanding like crazy. So if this afternoon, instead of screaming into the 27s on the VIX index, in fact, we start to see a diminution, and it starts to go it's at 2670, below 2570, and the Dow, instead of being down 450 points, is actually down 150 or less a little later this afternoon. We could get that counter trend rally tomorrow. Why? Because look, crude oil is starting to pull back a little bit more, and we're looking at crude oil right there. Crude oil is pulling back a little bit more, and it hasn't closed under the 14-period moving average. So you have to see crude oil actually under 88.30. It needs to be maybe even in the 87s to say now it's pulling back. But you might even see gold start to pull back a little bit. It's at the high. It's at up 25. Let's just keep watching things. Okay, don't over-anticipate. Those are just things to look for if you expect some kind of up-late bounce. Meantime, be careful. I'll be back tomorrow with Technical Friday. We'll do all those temporary resistance